Okay, thanks for tuning into Bloomberg Quint on this very new property that we're kickstarting today, which is called the IPO Adda. We'll try and get in managements who are coming out with their initial public offerings and, for lack of a better word, grill them on what is it that they are doing and how is it that the prospects could be over the course of the next 12 to 24 months for investors to take an informed call. And today, the IPO of Tejas Networks is on. Sanjay Nayak, who is the CEO and Managing Director of the company, joins me, Sajid and Yatin in our studios to talk about the company and the outlook ahead. Thanks so much for joining in, Sanjay.
Most welcome.
Tell us about this company. Tell our viewers about what is it that you do in a nutshell.
So actually, at a very high level, we are a technology product company which is building telecommunication equipment. So from a very simple angle, if you think of using broadband or any high capacity bandwidth, it goes over the equipment that we design, manufacture and sell around the world. So on a fiber optic network, the electronics that goes on top of it is what we do. So when you're doing hundreds of megabits of terabits of transmission capacity, that is exactly what we do.
Wow. And how is the business shaped up over the course of the last 5 to 7 years?
Very interesting. So in fact, what Tejas is doing is something very unique because in India we have very high quality IT services companies. We are probably first of the blocks as a product company out of India in the tech sector. So what the difference between a product company and a services company is that you got to invest all the money in R&D and technology and innovation upfront, which we've been able to do over the last 4 or 5 years. And once you're able to get to a certain size and you have a product that is world class, which we do, we are able to scale up the business quite comfortably. So if you see from FY15 to FY17, we more than doubled our revenues, but correspondingly, if you see from a headcount perspective, we were a 500 people company in FY15 and we are a 600 people company right now. So just by adding 100 people, we are able to go from 400 crore revenue to around 900 crores of revenue. So that's kind of the scalability or operating leverage one gets in a technology product company, and that's something which we think is quite exciting from an Indian angle.
So Sanjay, you have doubled your revenues, but the biggest issue is that you're using the funds for working capital and not for growth. Why is it that you need funds for working capital?
So actually, to be more accurate, we are having funding for 3 different purposes. One is actually for R&D, so we're going to invest more in R&D and increase.
But that's 45 crores.
That's correct. And the second thing is working capital is also something which has dominated our business because as an infrastructure provider, usually the payment cycles were a little bit longer, and I say were in the past because over the last 2 years, if you see, our working capital has dramatically come down. And then the third purpose was also, so after the working capital, we'll become a debt-free company, which basically makes our balance sheet much more stronger. And the third and equally important reason I would say is that as a product company from India trying to go global, we've got to have a much stronger balance sheet. So when we are talking to operators who want to give very large orders, they want to see us competing with giants which are from China and the US, and they want to make sure that we have a balance sheet to do that. So by taking the IPO money, we're going to strengthen the balance sheet as well, which will allow us to scale our international operations. If you really see, international business, for example, grew 70% year on year last year. But we just want to make sure that we can continue with the momentum and essentially invest in the sales marketing as well on an international side. So those are all the 3 purposes I would say.
But working capital is also because of the concentration risk which you have, right? You started in 2000 from the startup capital of the country, Bangalore, and you have the largest exposure to PSUs. And your working capital is around 33 to 35 days. So what have you done in the last few years to bring down the working capital? And because that's the biggest risk for your IPO as well.
Yeah, so actually speaking, there were 2 choices in 2012, 13, 14 when we were in a little bit of a cash squeeze situation. We could have invested a lot less in R&D and then actually put that more into the working capital for execution of the business. The conscious call we took is let's invest in R&D because what you invest in R&D today is going to pay back a few years later. As a result, a few of the projects that we are doing were decongested over the last few years, and that's why if you see our receivable days have come down by 100 days over the last 2 years. Our working capital finance cost has again dramatically come down over the last 2 years. So I think it's not actually fair to say that just because we have exposure to PSU business, the payment cycles are longer. Actually, it's more of whether you're in a supply business, which is what we primarily do, around 90% of our revenues now are on product supplies, where the working capital is not a challenge. When you're doing more of a project business, which is more of a turnkey, which is around 10 to 15% of our business, that's where potentially sometimes the working capital gets stretched. And at a macro level, you talked about customer concentration. There again, if you see 2/3 of our revenues are in India, 1/3 is international, and within India, it's about a 60% government, 40% private operators. So I think in that sense, it's and internationally we are in 60 countries and growing. So I would say that the nature of our business, which is the telecom equipment, we are in a B2B business. So there is naturally going to be a customer concentration because in every country you'll have 5 or 10 large customers that you can go after. But once we have spread that customer base across the world, the customer concentration risk is no different than any other peer group that we have from US or China for that matter.
Couple of questions. You were, stressing on the fact that the international, growth will be something that you will be focusing moving forward. The growth is coming in from that part. And India also, we are witnessing that most of the IT companies are getting mature. So probably the opportunity or the pies is probably moving out of India and probably, looking at the export markets. But, I was going through a couple of brokerage notes, and they said that your Africa expansion is something which is concerning, given the fact that there are a lot of risks there in terms of payment, in terms of competition, especially from a lot of these, Chinese players, Taiwanese players which are there in the marketplace. So in terms of your strategy in the, global arena where competitiveness is something which is a cause of concern, which might impact your margins and pricing pressure. So if you could give us a flavor as to what are you doing in the global front.
So actually, first thing you mentioned that India as well as the international. So India by itself is the world's single largest market, which is going from a voice-based infrastructure to database infrastructure. So I think India itself is going to grow at a very, very fast pace. And in our business, while we talked about customer concentration, the reverse part of that is stickiness of the business. So more than all our customers, we've never lost a customer in that sense. So once we win a customer, we are there forever. So I think India is,
If I can just interject there. So a lot of people believe that you would have benefited over the last 2-3 years because of the government's initiative to expand broadband connectivity to villages, and that might not continue going ahead. You don't think that will happen?
Not at all.
You think it will continue?
No. So in fact, there are two aspects of our India business. So the private telcos are on a completely different trajectory because they are moving their voice networks to data, and we are in all the major private telcos. So when they spend money in optical, and the optical transmission, the data business that we are in, is probably the least discretionary part of their capex. They have to invest into this because this is how they network. It will continue for the next 5-10 years. And why I say 5-10 years? Because India only has 20% of their cell towers are on fiber. So there's a lot of catch up to be done.
Okay, fair call.
And the government side, by the way, it's again, the BharatNet is just a beginning. So it's a 45,000 crore project. 2.5 lakh villages have to be connected. At this point in time, less than 100,000 villages are connected. And think about it this way. When each of these villages which have no connectivity start generating 100 megabits of data, the tehsil to which they connect get blocked. So you have to upgrade that, then the district and so on. So you're again talking of a 5 to 10 year cycle. Second question about the Africa and the international market. So let me first,
if you could also tell us, like the 70% growth that you got, bulk of it was from which region?
So it was, I would say, a combination of Southeast Asia, Africa, and a little bit of Latin America, all the emerging markets. So let me come to the second part of your question, which was that there's an inherent risk when you do international business in these countries. So let me put you a simple statistics in front of you. In our life cycle of our business for the last 16 years, our total provisioning in terms of bad debts is around 1%. And if I take two customers away, one was which went bankrupt and another which is a BIFR case in India, it's 0.7%. So I think the nature of our business, because once we supply equipment, customer needs us for 10 years. So it is not in their interest to not pay us. So I think our payment risk is significantly lower compared to probably assets which are supposed to be less riskier in terms of lending. The second part which you mentioned is that competitive intensity. So let me again give you another example. India is the world's largest free market for telecom equipment. I mean, and it is also the most competitive. I think our cost of services in India are the lowest in the world, and corresponding the equipment costs are the lowest in the world. This is the market, it's a free for all. Number 1 to number 10 on optical transmission in India, except for us, are all foreign companies. So we have been competing with them for last 10 years. We have seen all the curveballs thrown at us, and despite all of that, we have come out strong, and we are winning all the networks. And the reason for that is very simple, and this is something which has not been explored before, and I'm very happy to kind of share that with you. So about 15 years back, when voice networks used to be dominating in the world, hardware and manufacturing was the large asset. That was the competitive advantage. Today, when data networks are getting built around the world, software and intellectual property is the new fuel, and that is something which we are very good in India. And our product architecture is really what we call software-defined hardware, which basically means the hardware is the base. All the intelligence comes from software. So I think that kind of naturally fits into us, and with all the IPR, all the technology we have developed, anywhere in the world that we are able to compete, in terms of getting a market access, we are selected technically and we are winning, and that's why we have more than 60 countries where we won. We've got 50 customers in Africa, 50 in Southeast Asia. So I think competition-wise, we know what it takes to compete with the big guys. our R&D efficiency is superior to anybody else in the world
Sure.
because we can do
So
5 times more
so
R&D.
you're
for the
sure
same
that
product.
that will not be
Oh,
an issue?
absolutely. Absolutely.
Okay.
We have gone through, by the way, multiple technology cycles.
Cycles,
Yeah.
well.
So as a management team, if you think, we went through a technology cycle and we went through a business cycle.
Sure.
So we kind of understood both of them,
Sanjay,
right?
you mentioned about the 45,000 crore Bharat net plan. What kind of opportunity you see there, and you have already existing relationship with them. So what is the revenue potential from that plan?
So out of the 45,000 crore budget, if I were to put it as a rule of thumb, in the initial stages, around 15 to 20% of that would go into the electronics, which is the transmission equipment that we supply. We are in the phase 1 of those supplies. We are probably among the largest supplier of that to the government of India, and we've already done a lot of supplies for the GPON or the fiber to the home equipment, which connects the villages to the thing. That is also under the preferential market access program of Make in India. So what that basically means, if there's a government procurement and there's an Indian product available, the government is going to give a preference to buy that, and we of course get advantage from that.
Okay.
So that's another benefit which you get.
Yeah, okay, Sanjay. So, because we are short on time,
Sure.
without spending too much details into the business, just one quick question. What can investors expect in terms of growth rates from your company? I know you can't give exact numbers of PAT and all, but would the growth rates that you've demonstrated in the last 2 years be a good assessment of what you could do in the next 2 or 3?
And just to add to Neeraj, how do you handle the volatility in your free cash flows? Because that's one of the risk factors which is also there. How do you normalize it over a period of time so that investors have better idea?
So actually, first of all, the free cash flows have started to get very well. In fact, last year we converted around 95% of our EBITDA into cash. So I think that is kind of getting to a nice steady state. So I'm not concerned about that. Coming back to your question about the growth rate, it's a little bit difficult to predict the exact percentage, but I can say the following. India itself is going to be the large as well as the fastest growing market in the world, and we are incumbents in all the major accounts in private as well as telcos, government in India. Southeast Asia or Africa are India minus 1 or 2 years in terms of their digital maturity, and we are again getting significant success despite multinational and global competition. And third, I would say our product architecture is very unique, and the business model of a product company from India is also creating a new scenario where on the same financials, when you look at our global peers, they are hardly making any profits, if at all.
Sure.
And we are able to deliver reasonably good performance.
You
And that's what
qualified it
really
well,
excites us,
but is there a good assessment to answer my question? What you've done in the last couple of
I would
years?
be hard pressed to give you a specific number.
I don't want a number.
But I would say we see very exciting growth prospects. Last few years as a product company have given us a good indicator. If we continue to execute well, I think there's a good possibility that we should be able to sustain the
Very
momentum.
excited.
that we
Ranges from 12% to 55%. Somewhere in between.
No, I think definitely, yeah. So I think we should be able to, again, execute on plan. The opportunity is very clear, and that's really where I would say.
Cool. Sanjay, thanks so much for joining us on IPO Adda with your
Great.
thoughts. Really appreciate
Thank
you
you.
joining
Nice
us. We look
meeting you.
forward to talk to you
Absolutely.
on the listing day as well.
Sure,
Thank you.
absolutely.
Yeah.
Nice
Thanks so
meeting
much
you
for
all.
joining in.
Thank you.
That's
Thank you.
the IPO Adda on Bloomberg Quint.